Here with General Motors Chair and CEO Mary Barra as you begin what is going to be your first investor day in a couple of years. And I think it starts at a time when a lot of people are looking at GM and they're saying, boy, you've really been able to increase your profits over the last couple of years. Is this as good as it gets? Are you at peak profitability? What do you say to those investors?
I say that we're not. I think we still have tremendous opportunity to continue to grow our ICE vehicles. We have 8 new SUVs coming out next year that are going to either be all new or refreshed, that are going to have improved profitability in key segments like the Escalade, like the Equinox from an ICE perspective. And then our EV portfolio is going to continue to grow. And I'm very pleased that we are now in the second place from a U.S. Sales perspective, which I think is an indication that we have the right EVs for the market. So I think that, along with our discipline, the $2 billion we talked about taking out of our fixed costs will happen by the end of this year. So there's many levers that we can pull that are within our control to continue to improve our revenue and our profitability.
So let's talk about China first, and then we'll get on to those other points. In China, you lost $210 million in the first half of the year. Everybody knows what's happening with that market, especially for the non-Chinese automakers there who have so much capacity that seems to be too much capacity. How do you change that? How do you restructure operations in China so you get back in the black?
Well, that is our goal, and we're working with our partner to do that. We actually have a board meeting with our partner later this month, but there's already tremendous work going on from a restructuring perspective. What you'll see is, one, getting inventories down so we can build to the market, stay with and have the right inventory, which is going to allow us to strengthen pricing, but we're already starting to see an uptick from a sales perspective. So we're looking across the business, how do we right-size it, restructure it, so we have a going profitable business as we go forward.
There's a concern in the auto industry for the non-Chinese automakers that as talk of greater tariffs, whether it's here in the US and Canada or in Europe or other markets around the world, that it makes it more difficult for those companies in China to operate in China. Are you finding that? Are you finding greater resistance to what you want to do in China because of the talk about tariffs against Chinese automakers outside of that market?
I don't necessarily think it's tariff related, but I think what we've seen over the last few years is a structural change in China with the growth of Chinese OEMs really in the new energy vehicles. And so that has changed the dynamics in the market, and we've got to adjust to that. But I think it's a large market. I think the market still has tremendous growth potential, and I think we can go in with products that consumers are really going to want to have. We just started with our premium import channel taking orders for the Chevrolet Tahoe, and we're seeing strong interest. So I think that there's a way that we can play that really is going to give customers choice and some access to some great vehicles.
Let's talk about EVs. You have talked for some time about getting towards what you guys call variable profitability, or profits per vehicle as they're manufactured. Can you still get there by the end of this year? And then when do you see greater full profitability for your EV business?
Well, we are on track right now to get to that roughly 200,000 vehicles from a wholesale perspective, and we believe with the trajectory that we're on right now, we will see variable profit positive still this year. And then we're going to go into next year. We still have several initiatives that we're using and leveraging our scale to get to full profitability, and that's the goal that we're on, but we're not going to stop there. Then we're going to continue to improve, and we are laying the foundation. We have several areas that we're working on to make that happen. One of them is in not only getting our battery plants scaled, but also leveraging different technologies.
Do you have a target date for full profitability?
Well, we have said we'd like to get to mid-single digit profitability next year. And so we're going to be working on that as we move forward. But again, that's a waypoint, not a destination. We'll continue to improve the EV profitability.
One of the things we've noticed at the Spring Hill plant when we were over there is the flexibility in manufacturing. ICE vehicles on the same line with EVs. How much has that been able to allow you to drive down the costs in terms of manufacturing, both for EVs as well as for your ICE vehicles?
Well, it's critically important. And I mean, to start, by putting EVs into a plant that's already building ICE, we estimated that we saved about $1 billion then starting with a brand new greenfield plant. And so that starts with the savings. But then in manufacturing, it's all about efficiency and utilization. And when we can flex between the vehicles that are ICE in the plant, the XT5 and the XT6 for Cadillac versus the Lyriq, and soon the Vistic. I think that gives us the maximum flexibility to really continue to get that scale and drive costs down.
Let me ask you quickly about the overall market. A lot of concerns that we're seeing a plateau here because prices haven't come down as much as people would like to see them come down, and obviously interest rates for auto loans remain elevated relative to where they are. You're raising incentives. Are you concerned that this market is kind of locked into a range here where we just don't see the growth that many expected to see?
I don't, because when I look at it, yes, we have very successful products and our average transaction prices are high, but we also now are #1 in entry-level SUVs with the Chevrolet Trax and the Buick Envista. So again, we're meeting the customer where they are from an ICE and an EV perspective. On the EV side, we now have the Chevrolet Equinox EV that's more affordable, and we'll have additional models coming out. So I think across the market, we have growth opportunity, and we've been disciplined and will continue to be disciplined in how much we build. We're not going to build too many. That allows us to maintain price and maintain low incentives, well below industry average. And it's that kind of discipline that I think separates us from a lot of our competitors right now.
Finally, with the economy overall, how do you feel as you take a look at not only going into the end of the year, but more importantly as you look into 25?
Well, right now we're still seeing a strong consumer from the personal household balance sheet. When we look at jobs, when we look at unemployment, across the board, we're seeing a strong consumer.
Mary Barra, Chair and CEO of General Motors, before the company's 2024 Investor Day.